I have an investor panel, so I'd like to invite up onto the stage Catherine Wolf, who's part of our SFTA team, head of corporate relations, and also as member of SICTIC, and the head of the jury that will be judging the pitching. Brinesh, I think you're going to join us on a director also at SICTIC, and Manuel Eppert, who has a focus on female investing, so add an extra dimension to this discussion. We've got Ivo Rohner coming on to join us on stage, and Ivo is with the Swiss Post and a VC investor, so we have a great panel. I will do some moderation and ask a few questions. We'll start off with Catherine. There's going to be a lot of pitching today. What are you looking for in the pitching?
Well, it's always interesting to see how they present. I mean, how they're prepared for their pitching. That's a big deal. It's very difficult to actually match the time that is given, so that's always difficult. And then we have different criteria. So criteria that we're looking at, I think I can say that here openly. It's team, it's the business plan, or scalability. How is that possible? It is how the pitches went, how the pitches are doing, and then how level of innovation, how innovative is the pitch, or basically the innovation that they come up with. We have many criteria that we look at. Those are the criteria given here. Of course, we look at many different criteria too. I don't know if I should give a round so everybody is answering that question, please.
So if I were to build upon what you said, I think the first thing that I see is that when you pitch to an investor or a VC, you're pitching to a human. You have to find a way to relate to what that person might be perceiving. Because at the end of the day, you're not selling your solution to me. You have to think about how would somebody else perceive that. For instance, just day before yesterday, we had an investor came to us. So I work with the insurtech area. So we had a startup came to us and said, I want to change insurance. He said, can you explain to me what is the problem that you're trying to solve? He said, I have a great solution. My question was, what is the problem you are trying to solve? If you want to be a Google where you solved a problem nobody had, then you still have to tell me what is the problem that I have and I don't know about. I think that is the most important thing that I see as we go along this. So that would be my addition to what you said.
Yeah, I can complete that a little bit from, there's not much time to watch a pitch. So there is maybe 5 minutes, 6 minutes, and that's like love on a first sight. So if the very first words and sentences are confusing, then yeah, for an investor, also a jury member, it's not easy to follow up on what's actually being explained or told. So for us as early stage investors, investing into people, and of course there is a solution or a product, there must be a match between the people. And I think everything else can be solved later on or discussed later on. So it's about people, as you both said before.
Love it. So I have to disagree, yeah? So to make it more interactive. So there will always be a second chance, so never be stressed. Just tell about your business. Yes, it's about the story. Get our attention, because, for example, me personally, I screen over 1,000 texts a year. So, and I'm pretty good in checking the boxes. Yes, problem is one of it, but we've seen, for example, today a pitch where there was too much focus on problem. So I want, if I tick the box on a problem, I want to dive into the solution, especially if you only have a few minutes. You have to try to tick as many boxes, but tell a nice story. We're humans, we love stories, entertain us, don't overdo it. So this is it. No?
Okay. We've been doing this for 5 years, and we have the pitching, we have a methodology, we have a scoring system in place, we have a great jury. We announce the winners. The ones that don't win come to me afterwards and say, what is it that I did wrong? please explain where I was downgraded. So could you give some thought and some comments of what are the mistakes that people make that are founders that are pitching?
I mean, first of all, I would say it's very key that they get to understand what has gone wrong. They go and ask. I'm also in the jury of venture, which is from the ETH, and we can give comments as jurors. That's just verbally, just a written thing, and it's very key that we as judges also write down what is the issue, because they're manifold. If you look at, for example, ETH, sometimes it's very complicated explained. They base their pitch on explaining what a genius technology they have come up with, which is probably true, but then at the end of the day, it needs to be scale up, it needs to have a business model behind, etc. So they miss sort of that and explain it in a way that it's too difficult for me to understand. I'm not a physician or whatever the topic is about. So I think it's very clear to be clear and to have this main structure. You still need to have the main structure. You need to have a good team. You need to show the team. Because for us, that's also very important to look at. And we heard that was missed today in some of the pitches already. So think of that, not too complicated. Go through the scale that you have. You have the problem, you have the solution, you have the team, you have a business model, and then you explain also, of course, the solution in a very good way, but easy to understand and not too complicated.
Yeah, so if I were to build on that, one of the things that we notice is there's a concept called ontological arrogance. So a lot of startups, they think that who the hell are these old buggers who would understand my new age solution, right? And if they do not get funding or they get downgraded, it's always say, you didn't understand what I was trying to say. Now, some of us who've tried to quote girlfriends and boyfriends in our life, it's not that they didn't understand what we are trying to pitch across. And I always come back and say, there are hardly too many startups who come back to us one-on-one after a pitch and say, can you spend another 5 minutes? If I've spent a day listening to your pitches, 5 minutes is no extra time for me. And those are the ones who get a second chance. I think you mentioned there's a second chance. I believe those are the ones who get a second chance. Ask a question. The worst that I can say is, no, I don't have time. There's nothing worse that can happen. So I think that'll be my 2 bit.
So startup pitching and pitching in front of an investor is a little bit like mass market and sales. So there is so many investors, you have to pitch again and pitch again. And what we realized is that a lot of startups, they don't really know who is, what kind of investor type is in front of them, because we are 4 different people here and everyone has different backgrounds. So to me it could be more interesting of how the technology works, because I'm keen to learn more about how this problem could be solved. Someone else is more about the business model and the other one is more about the impact. So as a feedback, I would always say, have you done know your investor? Who is going to be in front of you? And what particular information do you need to provide in order to get the attention? And that's mostly where the misunderstanding or the low grades for a pitch occurs from. That's how we see that.
So for me, no-goes are not being on time, for example, being cocky, or being arrogant during a presentation, not answering on questions asked by investors. These will be free of many of the things. Okay.
Good comments, thank you very much. Let's try another question. VCs, they like to invest in technology. Yes? Okay. But they don't just want to invest, they want to exit. They want to make money, right? It's not putting the money in. They also want to know, how much they're going to make within what time frame. One of our members this year, Medico, had an exit, right?
Thank you.
Which resonates with Ivo, an early investor in Medico. So they were acquired by Ripple for 250 million. So that was an exit. How do you identify the next Medico, the next good investment? It's a good question.
So I think to your first point, to be a good investor, you have to do good investments, but also good exits. This is kind of the process we all want to run through. How do you identify the next amazing startup is always a hard question. And I think there you will get many different answers. It also depends a little bit on the background of yourself. For me, I'm a strong believer, like, play there where you have some more knowledge than the other people in society, maybe, because this gives you like a really good advantage. Also go with a kind of trends. For me personally, only invest in stuff which you believe will be there in the future. And with these points, drove pretty well so far. And also be open to other opinions and have the discussions. For example, what I really love, and maybe the benefit with a VC team, you have different people, different opinions, sometimes painful, but this actually gives a lot of value also to analyze such startups.
In our experience, the most important part is to have a diverse investment committee, because it also goes with what I said before, with the love on the first sight. You might be blind because of a pretty much cool solution, but there must be something else. And having a diverse investment committee, which doesn't need to be always the same people, but needs to be or comes together depending on the topic or on the startup, this is extremely helpful. But even there, it doesn't confirm or gives the high possibility for a good exit. But of course, how a startup is pitched at the beginning doesn't need to be the business model how it is being exited. So also there is transition through time, through the investment period.
Yeah, another factor that I've seen, and all of us will agree, so there is a 20-40-40 rule that exists in investing. Only 20% of the investments are really successful. 40% will fail dramatically. We're going to lose a lot of money on those 40%. And 40% in the middle will kind of break even. And that's a risk that we take as when we invest from ETH, I work with ETH and a lot of startups that come out of there, is very simple put that, are you only chasing a trend? So if I see a lot of pitches who are just chasing a trend, I will make sure that I will not invest in that. Or I will not request that. Because today, the moment somebody comes to our panel and says, it is an AI startup, trust me, half of my mind is already shut off. Because you've told me a solution, you told me a trend that you're chasing. Again, not in something that, what is it going to be in the next 5 years? So that would be that's the way that I look at it.
The risk is definitely, I think that is a lot of startups are not aware, right, that we are. I think you exactly nicely elaborated that. It is a risk. That's why we all have to look at so many startups and make our lists and say who has actually, or we think has the best potential. There is, unfortunately, of course, no golden thread. We say this is the way to go and this is how you look at a startup and this is going to be a successful startup. We don't know. We really don't know. One thing that I look at is this startup has to go through many ups and downs. It will be difficult times. There will be glory times. And it needs to be a team that actually can go through that. Because you have 5 years, I say, at least, that you just have to go, you have to be resilient, you have to not give up, you have to be motivated, you have to find partnerships, and you have to go through. And I think that is one thing that I look very much into too, is like, do you have the guts and the team that goes through thick and thin to actually, whatever comes to you, to overcome and to still be motivated and go for it. So I think that's a big thing to look at for to be successful, to be a scale-up company. No, of course, it's the product as well.
Thanks, Catherine. One final question, quick answers. We had the comment from Karen this morning about investing in female startups. Manuel, you run a VC that's focusing on women-led startups. Could you talk about that issue and how you're helping to close the gap and what you're looking for.
Yes, absolutely. So you said issue. So I think it's not an issue. It's more like an investment opportunity which exists and has not been, okay, I shouldn't say exploited, but hasn't been used so far. We heard before from Emma that from a wealth management perspective, how an individual invests money into to sustain the wealth. So what we do, or what investing in women should be, is like, okay, there is an investment opportunity, there are risk and returns, and it's a segment. So why should someone invest into a women-led startup? It's the same as I said before. So there is a founder, there is someone with knowledge, with experience, and this knowledge and experience could lead into a business model, and this business model is investable. So what does it mean for us? So what we have experienced is working together with female founders. It's a little bit like it's a knowledge transfer. So usually they ask us, hey, Manu, do you have money? And then we say, yes, of course, but. And then this but is an entire process through exchanging knowledge, understand where are gaps in the team, where can either we or someone else support, and what is the right investor. It doesn't need to be us, it could be someone else. And that's what I said before, so know your investor. And I'm sure there's for each and every business model or startup, there is a potential investor, but it's maybe just not being seen just now, so you have to do a little bit of research. So investing in women for us, it's not philanthropy or giving money or helping, it's a risk and return business model. And we have our experiences working together with women, female founders. It's a more trustful and a more successful partnership and relationship compared to what we have done in the past. And I'm not saying men founders are less experienced and less successful. I hope this answer.
It does. Thank you very much. Okay, big applause for our investor panel. Thank you very much. Please take your seats because we now have 4 more pitchers coming. Can I call up onto the stage Anna Spack of Generation Impact Global, the next pitch that we have. Welcome. And while we're getting that set up, this is the Innovation Award that will be awarded to the top pitches today. And there's a similar one for the young innovators. So that is what we're talking about. And you need the microphone?
I can maybe. Thank you very much. You're comfortable with this? Yeah, I'm okay.
You set the clock.
Okay, good morning, everyone. I'm really happy to introduce our company today. I guess we have some problem with the monitor. Yeah. Okay, perfect. So my name is Anna Spack. I'm founder and CEO of our company. And today I'm with my team, with a little bit my team, with a co-founder Ricardo and our dearest partner Robert, which we touch a little bit the different subject. So let's start because we have really limited time for our pitch.
To Generation Impact Global, a pioneering force in the ESG reporting software realm. In a world where environmental, social, and governance ESG responsibilities are paramount, Generation Impact Global stands at the forefront, offering cutting-edge solutions for ESG data management. Today, organizations face a labyrinth of complexities in ESG reporting. The challenges of managing vast, diverse data securely and efficiently are immense. There's a pressing need for a system that's not just robust, but also interoperable across various frameworks. Introducing our all-in-one ESG data management platform. Designed for the modern era, it ensures top-notch security, seamless interoperability, and compliance with global sustainability frameworks. At the heart of our innovation lie blockchain-enabled solutions for data verification, coupled with artificial intelligence for data capturing and predictive analytics. Our team, led by our visionary CEO, Anna Spack, is a tapestry of diverse talents, all committed unwaveringly to sustainability. Each member brings a unique perspective and expertise, driving us towards excellence in ESG reporting. We're not just part of the market, we're redefining it. At Generation Impact Global, our mission goes beyond business. We're committed to advancing ESG reporting for a sustainable future. Discover more about our services and join us in this revolutionary journey.
We are ESG data management and sustainability reporting software company based in Geneva in Switzerland with Société Anonyme. We are on market. We opened our company 1 year ago. We had MVP, which is 10 products in our platform. And when we talk about addressable market, it's very important to know that it's about regulation, it's about compliance. And we hear it second day about sustainability, on definition sustainability, but we're talking today about compliance, because behind we have, and especially in the European Union, it's Corporate Sustainability Reporting Directive, Due Diligence Directive, Corporate Sustainability, and the European Sustainability Reporting Standard, which drive company to report sustainability and be in compliance. Inside our system, we have, as I said before, 10 products, which is MVP, and we license it. We are working very close with global reporting initiatives. We're working with IFRS. We're working with SASB. We are very close with the European Commission, and we have authorization to have tools there as well. And you can see that this year, we're planning to launch another 14 products which support companies on the way of sustainability reporting. Of course, when we talk about, we have challenges as well as a company, because the first challenge is regulatory. It's constantly changing and bringing burden to the companies where we have to address, and we need to talk about this. We hear a lot about innovation and technology constantly, and we need to think about our company as well more than 2 years in advance, because we are working with different international companies all around the world, which can apply different regulations, and this is where we're coming. We need to think about how we can support the companies on the way, and this is where we work with artificial intelligence on the way of how we can capture the data from the all data of the companies, how we can bring on the report, how it can be compliant, and and our partner work with Harvard, for example, or with the United States government, where we also learning constantly on research on the way of data. And this is another challenge, because when we talk about data, it's overwhelming. And at the end, of course, we want to scale. We are going international. We are working with diverse companies. And we have always to think about security, cybersecurity, and data security. Then when we talk about business model and who is our client, who's use our system, here you can see the main sectors. Of course, it's SME. So in this case, they have everything in the reach. They can just buy for 3,000 per year license. They have everything in reach. They can play there. They have all the reporting system. They can do everything they need. We work with corporate and enterprises, big enterprises. In this case, it's different way, because it's fully customized. It's integrated solution. We see on data. We see how we can ERP or how we can integrate data. And it's different, the way of revenue model, it's already included customization. We work with financial sector, banks, equity funds, and this is as well as advisor consultants. We mainly white label there, because it's required a lot of customization and to bring their tools to make it compliance. And then we work a lot on marketplace, where I would like to Ricardo join me.
Yes, on marketplace is the last cluster that we're tackled, but is maybe the most important for the investors' point of view. The marketplace, we have a very flexible, let's say, system that we can adapt to all the marketplaces. We already have one marketplace, quite big, with 5 million business client, corporate clients that we are addressing, and is starting at the end of the month. So this is bringing us to the financials of the company. As you can see, we did very base assumption So the base case and let's say the best case. The growth of the, let's say, B2C direct client is steady and is constant during the 3 years projection that we have. What it makes the difference mainly is the penetration inside the white labeling that we do with the marketplaces. 5 million clients, for example, on the first marketplace. What we did as assumption in the base case is starting the first year penetration is 0.15%. So only 0.15% of the clients will adopt, will buy our product. We have 2 products and we are launching constantly new sets of products with this marketplace. So the growth of the marketplace of the penetration is, the assumption is from 2024, 0.15 going up to 2026 to 0.5%. So this is bringing us a constant revenue, monthly revenue, which will be around a couple of millions, with a compounded annual growth rate of 73%. The assumption is that, of course, that in 2026, the need of small, medium enterprise for the reporting, the ESG reporting, by regulators, by the supply chain lead, by clients, will grow constantly. On the best case scenario, we didn't go up a lot. So the penetration that we use is 1% on the marketplaces. We already have, as I said, 1 marketplace signed that is going live. We have 2 marketplaces that we are doing the proof of concept in the next few months. So the best case scenario, is from 1% up to 3% in 3 years' time penetration. Okay.
So this is, in a short, about our company. We are looking, of course, for partners because we want to grow. We want to take a share. We want to have more clients and internationally expansion. That's why we're constantly looking for best solution, for partners, for synergy. And thank you very much for our time.
Hi, thank you for the presentation. Could you explain your pricing model to me?
The standard pricing model that we have is 3,000 with the full access to the platform. The platform is an ecosystem. So it's a repository of all the legislation and the teams, so the company and the ESG team of the company, from CEO to everybody, they can access the platform for the 3,000, okay? So without customization. Then in specific cases for private equity fund, we have some specific customization. For marketplaces, we have customization. And then with the marketplaces, we are also launching single reporting for 700 euros or 700 Swiss franc or 1,000 euro. So the client, small, medium enterprise, they can go and do their own GRI reporting because their client is asking, for example, and they need to provide this. The market, the advisory part of the market, they are pricing for 1 GRI reporting 25,000 on average. So it's a huge difference. It's something that small, medium enterprise, they cannot afford. Even if they will lose the client, it's too much to try to tender. So this is our base, let's say, model. We are very flexible working with partners, with advisory to price and to build different type of business model on this.
Thank you very much. Big applause for everyone.